Hello, everybody, and thank you for tuning in to the Liberty Report. With me today is Chris Rossini, our co-host. Chris, good to have you with us.
Oh, it's great to be with you, Dr. Paul.
Very good. We want to talk about the Fed again, and we will again later on, I'm sure, because the Fed is under attack, and rightfully so, because they're not doing a very good job. And people are getting nervous. Not just those of us who had studied Austrian economics and argued the case that we should get rid of the Federal Reserve, and we agree with those people who said we never should have started the Federal Reserve. But right now, the establishment financial people now are getting a little bit nervous too, because when they start talking about negative interest rates and all that's going on, and stocks going down, and bond prices skyrocketing, people are getting very, very nervous. And of course, our position is that they're trying to do something that they can't do. Even though they've been around for a while, they really survive in spite of themselves, because they sort of got away with getting credit for a boom period, which does come. People invest and they work hard and they produce, and we had a reserve currency, so there were boom periods, but they always led to these recessions, which are the corrections that are coming of the mistakes that are being made by artificial interest rates. So that has been going on, and now we see this thing continuing. It's getting much worse. But when they get these downturns and these recessions, they go to the Fed, save us, do something. So they print more money, and usually after pain and suffering, and over the years they keep getting worse, then the market seems to turn up. But I think there's something different that we're dealing with now, Chris, and that is, since the last recession, it hasn't been that miraculous. The Federal Reserve hasn't been able to wave a wand and immediately return everybody to normal artificial stimulation of the economy, and that's why people are getting nervous. Now we live in an age where the conventional wisdom, as long as the Fed's lowering interest rates, everything will be okay. I think last week we hit a historic point when they lowered the interest rates, not as low as Trump wanted, but lowered 0.25%. That usually would, give reassurance to the market. And yet shortly after that, the market went down and continues to go down sharply. All of a sudden, it looks like the tinkering that they do to manipulate the business cycle is no longer working. And I think that is contributing to the conditions now where the markets are very, very shaky. Chris, I know you've looked into the Federal Reserve law and you've written about it, so let us know what you're thinking.
Well, Dr. Paul, you make a great point that they survive in spite of themselves, because the first point to make is they do not know what they're doing. Now, they have a great press that's always on their side, and they make their big decisions in big, glamorous marble buildings. But this idea of central planning is a myth. Was it in their central plan back in 2008 for Lehman Brothers to fall, for Bear Stearns to fall, Merrill Lynch, AIG, like dominoes? Was that in their central plan? If anything, that shows that they do not have the control that people think that they have. So, and ironically, they were put in place to bail out those financial institutions, but they were in such bad shape that even the Fed couldn't help them.
Right.
So the number one thing to know is they don't know what they're doing.
Right. And I want to just mention what the so-called mandates are. Since the Federal Reserve was established, they were given a dual mandate, that they should have maximum employment and stable prices, and you'd have a wonderful world. And of course, maximum employment means that they have to come up with statistics, because everything is political. So the way they measure employment has to be different. Right now, employment rates are wonderful. Everybody's employed. But some people hold 3 jobs, and some people who have 3 jobs can't pay their rent and have to live in the street. So it's fictitious just to say, we have low unemployment figures and everything is okay. And stable prices. Stable prices is price rigging. In a free market, you really don't want government stable prices. What you want, and what we don't have, and that is flexible interest rates. So interest rates are supposed to fluctuate and not be controlled, and the market's supposed to give us some messages, and that is now added on to the third mandate, and that is low long-term interest rates on bond issues, so people keep financing this system. But these mandates can't be met. They have to be politicized, and then they talk about, well, how do you measure inflation and stable prices? Oh, the CPI. Oh, we'll mess around and doctor the CPI up to make sure that we're living within our means. This whole idea, a lot of people I talk to think it's the biggest fiction that the Federal Reserve is celebrating because they have inflation below 2% and they're excited because they've decided that 2% inflation rate is somehow out of the sky. They picked this number and it's okay, and we can thank Bernanke for this, because in 2012 he thought, well, I can maybe do something to get people to spend more money on goods and stimulate our economy. So he had this rule that we should have more inflation in the economy, and if we could just get that, it gives them license to print for good reason. And then if there are prices going up, then people will say, oh, I can't save my money, I'm losing out on it, so what I'll do is I will save, I'll spend the money and stimulate the economy. Well, that's all fiction. That's all messing around and thinking they do have control, because all of a sudden it doesn't work. And you've already mentioned that, Chris, this QE stuff was supposed to help the economy. And it made the balance sheet of the Fed gigantic, $3-4 trillion increase on that. And the money went into the banks. The banks had so much money, they'd deposit the money back at the Federal Reserve and make more interest than we would get if we put our money in the bank. And that is, how preposterous it is. So one of the themes that I talk about, and when we talk about a program like this, is it's not working. It's not going to work. It was never intended that people would believe it could work. And right now, I think we're going into a very, very dangerous phase. I think when people predicted in the 60s something big was going to happen with Bretton Woods, and it did, and you saw gold go from $35 to $800, I think we're at this point now. I think last week was a big indicator. The Fed doesn't even know what they're doing, and then they get badgered. Then they lower the rate a little bit for the president, and then they say, well, this is not a good idea. So they back off, and now the markets are going down again. Well, I'll change my mind. We'll lower the interest rates anymore. So, Chris, I think the argument is on our side that this is a non-viable system, and it's not going to be healed by a bunch of bureaucrats coming up with money management.
Right, Dr. Paul, and I agree. We are in a dangerous phase, and that danger is the detachment from reality. This unlimited printing money, you can see what it has done to politicians, to people, to the military-industrial complex. I mean, look at the warfare state. Every single day, sanctions on this country, troops here, ships to this all over the world. They believe that this money printing will last forever. And on the welfare side, not only are politicians promising free whatever they want, they're promising it to people that just walk into America. It's not even just for Americans anymore. So we're really in a dangerous phase, because this is detachment from economic reality, and we just plead to our viewers not to believe in it.
I'm still marvel at the fact that the founders of this country, and people even before the founding of this country, understood inflation pretty well. Even back to the Roman days, they had experience with inflation. Destroy the money, print the money, create it, and empires fall and countries fall. And our founders put it in the Constitution because they didn't like paper money, they didn't like fiat money. They outlawed fiat money, and they said only gold and silver could be legal tender. And yet we don't follow that. But when we have these mandates from the Fed, of course we shouldn't have a Fed. That's not the way to go. But if we had one goal, it shouldn't be fixing anything. You really One fallacy that we did in our early history was we fixed the ratio or the price of money between gold and silver, and that was not a true market position. So you don't want to do that. What you wanted was to fix the definition, define the unit of account, and don't make it really rigid. You want it to fluctuate, and that's what the market's all about. But we've totally destroyed that. Nobody realizes how important that market rates of interest are. They're starting to look, well, maybe negative interest rates don't sound like a good idea. But any messing around with the interest rates distorts, the supply and demand and what people should do, what the investors do, what the savers do. And we've been in that big time. And it looks like right now there's not many proposals going along that line. And that's why I've been working on trying to get more exposure of the Fed with auditing the Fed. We should continue to do that. But I've always maintained that we're not magically going to have a bunch of new members of Congress who are going to systematically say, well, we can work our way out of this. And they did this in 1875. They worked their way out of the inflation of the Civil War. They quit spending and quit printing money, and they got over it. But we can't do that today because they are so addicted to this. And some people would say, well, Trump was right. He did this and this is, he is right in that some of these things that he wants, lower interest rates, and this would help the economy. Yes, temporarily, but to me, that's like sort of helping alcoholic get through their shakes by giving them more alcohol, or a dope addict giving them more of the drugs. But just giving them more money might make a few people feel better. But right now, I think people are recognizing that the old tricks of the trade of central economic planning, that's what the Federal Reserve is, central economic planning, is not working well, and they're anticipating, they know there's another recession coming, and I think we're well on our way into that, and they're not going to have many tools for this because it's bigger than what they're talking about. They'd have to, quit spending. We'd have to change our foreign policy. We'd have to do something with our welfare system. We'd have to do something with our immigration system, and it's not going to happen, and that's why the financial things are dangerous, and people are going to get a lot poorer. But it also can very well lead to a lot of problems within our own community, and more danger for our domestic economy and for our people.
Right, Dr. Paul. I'll finish. We know what the end game looks like. We don't know when it's going to be, but because we're not, we can't see into the future. But we know that central planners always paint themselves into a corner. They reach the point where no matter what they do, no one is going to be happy. No matter what they say, no matter what moves they make, they get to the point where they can't bail out everybody. How do you bail out the welfare system, the military-industrial complex? You reach the point of no return. So if you're watching the show, you're one of the people that are ahead of the curve. You can see clearly. And we ask that you please share our shows so that more people can see clearly and just get them out of this fantasy land of central planning. And we'll have a fighting shot when it's time for new ideas to replace them.
Very good, Chris. I want to follow up on the different things that the Federal Reserve does as a central economic planner. Nobody likes to pay taxes, even though everybody wants the stuff that you get with taxes. So the socialist says that you can have whatever you want and it's going to be free because we'll print the money and it's going to be magic. Well, anybody with a common sense would know that is not true. But we also know that if every family, every individual would be taxed on a monthly basis for what government costs. What if we just had to pay our way on all the foreign policy adventurism, which is huge? And people don't really have their heart on this, but they try to ignore it. They know what they're doing. They're protecting our Constitution and our freedoms. And but they would not tolerate a tax because they'd go broke. They wouldn't have anything. It's better to delay the payment. Pass it on to the next generation. Pass it on to price increases. And that's what they do. We talk a lot about passing it on to the next generation, and that does happen. But right now, the next generation is already here, and they're suffering. And that's why people are living in the streets, although they have jobs. So the facilitator here in the Federal Reserve and the economic planner, and this is deliberate. Well, we can rob people if they rob us, if a robber comes and they stick you up and they take your wallet and they take out all your cash money, and that would be it. That would be a robbery, and everybody would know it. The federal government can come along and they send the IRS agent and they do that too. And people complain about that because they have to fill out a form. So there's a limit there. Fortunately, there's a limit, but we're at that limit and we've been there. But we have a magic thing that economic planners can do, especially if you have control of the world's central bank. So what do? We just print the money like the socialists want and make everything for free. We don't make everything for free because we're better managers than that. We know that's harmful. But nevertheless, we participate in it, and that is the tax. People don't think of that as a tax. But to simplify it, let's say you have $100 in your wallet, and the federal government comes along and they say, well, today the money supply has been doubled. And it doesn't work this way, but prices are going to go up. Let's say the price is double. Well, you just lost half your money. They stole it from you without even using a gun or an IRS agent. And that happens all the time. And guess what's going on now? We have the conservatives in charge, and we had them in charge before. We had the House and the Senate and the presidency, and guess what? Deficits go up. Deficits go up every bit as much, sometimes worse under Republicans, who are the conservatives. And now it's $1 trillion a year, and they want interest rates to keep the printing presses running. But what they cannot control is the confidence in the system. And that is what happened when Bretton Woods broke down, and that is what's happening now. The confidence in central banking and central economic planning is disappearing, and it's going to be gone. And the final conclusion of that can be rapid. It can be sudden. So though we don't know when that's going to happen, next month, next year, you could see this thing radically change. But the one thing for certain, you just can't print money and create wealth. Printing money destroys wealth. And the things that we do with that printed money, the welfare warfare state doesn't produce wealth, it consumes wealth. So we're nearing an end of a time, and some people like to say that, well, we have a lot of freedom. We have more than a lot of other countries do, but it's a sinister type of oppression that we have because it's a financial intrusion. Now it's a private intrusion because they can't let you get away with anything and not paying taxes. So privacy is gone, and we have a foreign policy that encourages that type of policy. And this has not been good, but it really boils down to one thing. What should the role of government be? The role of government ought to be maybe, to define a sound currency. Maybe the role of government ought to be to protect our liberties, have a defense, not an offense, and don't police the world. It wouldn't be really that complicated. But we've tried it, and it worked very well. But we're not trying it now. We're unwinding the part of our system that did give us great wealth over the many years. But we have been introduced to a soft way of living, and that is printing money and not living within our means. Individuals can't live beyond their means forever. They can for a while until the banker says, no more money, we're not going to loan it to you, pay back what you borrowed. And that's what's happening now, because people will eventually say, yeah, we're still buying your treasury bills, but they're not going to do that forever. I want to thank everybody for tuning in today to this special program on the Central Economic Planner, the Fed, and the reasons why we think the Fed ought to go. Thank you for listening, and please come back soon.